All right. Well, I think we'll go ahead and get started today. So first of all, thank you all for joining us. And a couple housekeeping notes before we get started. So first of all, I have muted everyone at the current moment, and I'll ask that you remain muted until our speaker has finished his presentation. And then if you'd like to unmute and ask a question, you're certainly welcome to do so at that time. There is a chat window in the bottom right-hand corner of your screen. If you've went to full screen, you'll have to put your icon up there and you'll be able to see the chat window and turn it on that way if you'd like. And we will take questions at any point in the presentation through the chat window. Anything we miss as we go along, we'll try to catch up at the end of that. If you're having any technical issues, please put them in the chat window and we'll see if we can get those addressed for you while we're going here. So with that, first of all, I'll introduce myself. So my name is Joel Schumacher, and I'm probably a new face to most of you. I've been with Extension for about 15 years, and Paul LaChapelle has transitioned to a non-extension appointment here within MSU, so he's going to be teaching more traditional courses. So with his departure, I've stepped into the role he had of serving as moderator for this. So would like to thank our partners here in the small business webinar series, and that would be the U.S. Small Business Administration, the Montana Economic Developers Association, the Montana Department of Commerce, America's Small Business Development Centers, and we have some additional support from the Grow Great Falls Economic Development Team, the University of Montana, and the Big Sky Economic Development Group as well. So I want to thank all of those different organizations that have contributed to make that happen here today for our August small business webinar. So with that, I'm going to now introduce our guest speaker this week, who's got a hot topic here, and that is the Payroll Protection Program and some of the portions turning it from a loan to a grant, which I think is a hot topic for a lot of folks. So Jake Carter, who's a certified public accountant based out of Whitefish with JCCS CPAs, which is one of the larger or maybe largest Montana-based accounting firm in the state. So Jake's going to share some of his knowledge with us. So with that, Jake, I will turn it over to you.
Okay. Thanks, Joel. Thanks to everyone tuning in. I think we're scheduled, maybe correct me if I'm wrong, Joel, for about 30 minutes or so. I want everyone to know that I've boxed out well beyond that. I've given quite a few of these presentations and webinars, and I usually go about 30 minutes long every single time, if not an hour long. One of our presentations was scheduled for an hour, and I think 2 hours and 25 minutes later, we were still answering questions from viewers. You can't quite help but ask a question that's maybe relatable just for your business, but chances are it's going to be relatable to someone else. So I do encourage, if you do have something really specific for your company, I am more than happy to help. But maybe we do it in either later on in the Q&A session or even a one-on-one. I'm happy to jump on a phone call or email or something like that. So, but if you think it's a question that's applicable to someone else, please fire it out there. There's so many unknowns still after about 36 changes now. We still have a few questions outstanding. So with that said, the presentation that we're going to talk about today, I'm going to keep it kind of short and brief, actually. I've had some amazing Q&A sessions that just kind of organically will evolve into just a great 30, 45 minutes well spent. So I'm going to really just kind of highlight 10,000-foot touch on everything. And then I'd kind of like to open it up to questions, or I can kind of spitball some questions that I just know people have been having. So what we'll do is we'll just kind of do a quick overview of what happened. Obviously, we're all familiar with the pandemic we're going through. That's obviously what spurred the need for this program or some sort of program. And the Congress came out with quite a few options The most popular, of course, is the PPP, the Paycheck Protection Program. And I'll talk about that here shortly. But I think it's good to note that there are several other programs, credits that you can take advantage of as well. Some in tandem with the PPP, some not. So that's a really good takeaway point here. And then also, you know, for some of you, maybe if there's a 501c6 on the call today, you guys have been hung out to dry. You couldn't apply for a PPP. But maybe you were looking at possibly taking a credit, maybe the EIDL, wave 2, possibly round 2 of the PPP. It sounds like the 501c6s will get included. So it's incredible how as many answers as we've been getting over this past couple of months, we're still, again, kind of still waiting on a few items. So I just note that because you got to be paid really close attention to some of these programs that are available and how they interrelate. So EIDL, we'll talk about that a little bit. There's the employee retention credit, and then delaying the payment of your employer payroll taxes is an option out there as well. So I'll touch on those last three, and then we'll dive into the PPP. The EIDL was great in theory. It was a complete failure to keep it nice out of the gate. That is. It was intentionally designed to infuse money instantly. As soon as you have this emergency happen, the idea was, and the promise was, that each business would be able to get up to $10,000 within 3 days. That did not happen. It took months. And so the initial promise was not only would that $10,000 be right away, but it would be, quote, free. It'd be a grant. And that has not been the case. The way they rewrote some of the rules along the way, essentially, and this is going to probably affect a lot of you, was you were probably, you know, deer in headlights, what can we do? And you were advised to apply for PPP if you could, as well as the EIDL, because that was the intent. Apply for the EIDL, get your $10,000 right away, knowing that'll be free, and then the PPP would eventually come in as well. And you get the EIDL loan, right? That was the other aspect of it, which that took a while too. Not only was there $10,000 of emergency grant money, you get a loan too, business loan. So essentially, what we all need to know is that if you got that $10,000, or what we were figuring out was happening was they were essentially granting $1,000 per employee up to $10,000. That's kind of what I think we discovered several months in. So if you had 2 employees, you might have got $2,000, or if you were a sole prop, might have gotten $1,000. You need to know. I'm almost certain that most of you got it after the deadline, after the date that they instituted some of these programs. I forget what that date is, but it was essentially everybody. I don't know anyone that got the money before that. It's not necessarily, quote, free. It's not a grant. It is if you didn't get a PPP. But if you got a PPP, let's just do an example. If you got a $50,000 PPP and you got $8,000 of EIDL money, this emergency grant, yes, that grant is free, but your PPP loan, what's the max you can have forgiven? $42,000, essentially making that EIDL not free. Everybody track with me there? So what they're going to do is when you go to apply for forgiveness of your PPP, you have a $50,000 PPP, spent it properly with 24 weeks now to spend it, no problem. You're feeling good. Just know if you got that $8,000 as well, they're going to limit your PPP forgiveness to $42,000, effectively making that $8,000 not free. So if you have questions, chuck those in the chat box. We can talk about that later, but just something to be mindful of. Again, as these are, they're kind of all tied together. You got to be careful. Employee retention credit, kind of a sleeper. This is something that I was exploring for some of my clients who weren't eligible to get a PPP. EIDL was a flop out of the gate, and so we're thinking, okay, can we use this? And you know, bless Congress's heart for trying to give us something. It was just so open-ended. You know, what's a reduction of gross receipts mean? a significant decline, right? There's rules to that. What does it mean to have operations fully or partially suspended? All of these rules were laid out to hopefully be available for this credit. Very few of my clients are going to be going after this. I hope some of you maybe are able to, if you weren't able to get some other dollars. It's out there. So first off, if you got a PPP, quit listening to me. This credit doesn't apply for you right now. There's kind of rumble saying, "Oh gosh, we need to do whatever we can to take advantage of the situation we're in." And so there are some proposals out there in Congress to try to let people use this in tandem with the PPP. It doesn't sound too likely, but just know right now you can't have PPP forgiveness and have this credit. And actually, what they're saying is you can't have the credit if you got any PPP money, regardless if it's forgiven or not. So this we could go on for talking about this credit for quite a while. So just know it's available for either yourself or if you're helping people or whatever. It's available if they did not pull down some PPP money. I'll leave it at that. But it's just one of those programs out there that is available. I threw a couple slides in here. If Joel, you make the slides available, people at least have access to some resources regarding that credit to kind of fill yourself in. IRS actually surprisingly has the most robust FAQ page on. I've never seen it. There's like 90 answers, FAQs that they've released on this credit, and I still have outstanding questions. So kind of interesting. And then the other, kind of the third item out there, I'm not sure if people are aware of it, not sure how applicable it is. You can do this even if you did secure a PPP loan. And it's essentially that the employer portion of the Social Security tax, you can get deferment on that payment. Some companies say, well, why would we even worry about that? Well, for some, if you think of some of your larger businesses, it's essentially a tax-free loan or interest-free loan, I should say, interest-free loan for deferment of a payment. So, if a business has to send in 10 grand every month for their, 941 payment, a good chunk of that might be employer portion of that Social Security tax. You can actually defer that out into 2021 and 2022. I'm sensing kind of this accounting nightmare. What if you make a mistake type thing? That's my kind of cynical brain. But at the same time, if the number's big enough, it'd be worth following up with. So if you're a 1, 2, 10 employee business, I don't know. We haven't been exploring this option too much, but just know, again, something else out there that when cash is tight, this is an option that they've given to help relieve some of that cash flow issues that folks might be having. Again, something else that we can, if you got questions on it, throw in the chat box. We can talk about it, and we can follow up later on that.
We do have a question that's come in, Jake, if you're kind of at a break point here.
Yeah, perfect.
So the question is, if I received a $1,000 disaster grant and then later, after they broadened the PPP program, received $7,700, so for a total of $8,700, if used properly, would all of this be available to be forgiven due to the low amount because it's under $42,000?
So I guess I don't know what the 42,000 is. There's been a lot of, I guess I've probably heard every number. If my loan's under a certain something, do I not need to worry about it? There's been nothing in play out there right now. Is everything under 150,000 is supposedly going to be kind of gone, just wiped off the slate. I think we're still going to have to file something though, just to do the paperwork. So maybe I'll forget the 42,000 number. It sounds like they got an EIDL of 1,000. They got a $7,700 PPP. And so here's another example. In their case, unfortunately, regardless if you've used every penny properly, the way it's going to work is you are going to go apply for forgiveness of your PPP of $7,700. They're going to limit forgiveness. They're going to limit forgiveness to 6,700. So you're going to receive a grand total of 8,700, but 1,000 in theory will need to get repaid. That's the answer there. So in my mind, the way I'm approaching that, and with my clients, I'm telling them that $1,000 EIDL, yes, it's a grant, but just know that when you go to apply for forgiveness on your PPP, you're going to submit to your bank. The bank's going to submit to the SBA. The SBA is going to come back, because don't forget, this is all SBA ran. They've got an EIN that received $1,000, and they've got an EI for EIDL. They've got an EIN that received $7,700, and they're going to be keeping good track of what's going on, and they're going to say, okay, we're going to grant you $6,700 forgiveness on your PPP. Please pay us the $1,000 back at some point. Pretty favorable terms, right? What are the terms now? I'll get to that here in a second on that PPP, but you would have to pay back $1,000. So I'm kind of telling my clients, hold on to that EIDL grant, because you're going to need it. Assuming times aren't terrible, you can just hold off on that cash. You can put it right back and pay off your PPP. So in that case, they're going to be stuck with $1,000 due to the SBA. Okay, so now here's just an overview. You probably are maybe all sickened to death by these rules of the PPP, but again, might as well just tell you about kind of what the latest is to make sure we're all on the same page. When everything was coming out back in April, it was an 8-week period, right? We were all familiar with that 8-week period. You got to spend the money, and I've never received so many phone calls in those first few days on figuring out how we spend the money. And where do we need to do with this money? Can I bonus it to owners? Can I bonus it to my employees? They're working all these hours to get us up online, to have website sales. And it was just incredible what was going on. And so we were talking about bonusing. We were talking about retirement plan money, right? That if you can consider that, putting money into like a 401k, a profit share was allowed as being counted towards, right? So now we're doing these mid-year profit shares for the first time ever. And that was the rules that we had to play with. And then they slowly over time started loosening up. So now instead of 8 weeks to spend money, oh my gosh, 24 weeks. We were thinking, God, that's an eternity now, but really it's been great. That change, the 8-week to the 24-week change, really has just kind of relaxed the nerves of being able to spend. It seems as if everyone is going to be just fine spending the money properly. Because the second bullet point was that you couldn't get forgiveness if you didn't spend at least 75% of that money on payroll. They relaxed it to 60, which was pretty helpful as well. So that in combination with 24 weeks to spend the money, given how the calculation was to get the PPP loan, the 2.5/12 calculation that everyone did to secure the money, really made it, the 24 weeks just kind of said, spend the money just fine. And that's really, I don't necessarily have a slide on it, but for anyone out there, sole proprietor, filing on a Schedule C, disregarded LLC, filing on a Schedule C, it's a cakewalk. Basically, they've come out and said, whatever loan you got, the 2.5/12 calculation you did out of the gate, that's the number you can apply for forgiveness and get it. So you're done. So if you don't have employees and you got a PPP because you're self-employed, it's going to be great. It was going to be tight at first because not a lot of people had rent money to spend or, business debt or utilities. And why penalize someone for that? And so that's why this extension was huge. The second bullet point, as I noted, went from 75% to 60% on what you could use the money for, in terms of having to at least have that much covered in payroll. It wasn't, initially people were kind of worried that it was a cliff. So if you spent 59% of your PPP money on payroll. Oh my gosh, we couldn't even apply for forgiveness. That's not true. It just kind of slightly reduced the amount that you could have forgiven. So that was that. And then recently, this is probably applicable for some folks as you're going into the forgiveness piece. They did kind of set up two different safe harbors to help alleviate that reduction in your forgiveness due to kind of inability to rehire workers. There's been a lot of hoopla over the fact that there's this Fed unemployment $600 a week benefit out there, and it's kind of been for some we're seeing there's almost this disincentivizing of going back to work, and Congress did not want business owners to have to sacrifice or suffer for that. So they put in place some of these safe harbors that said if you extended that job back to your employee and they didn't take it, if you can prove you extended it, do something, then we're not going to penalize you. Why? Because what's that penalty? That penalty is if you had 10 full-time employees or full-time equivalent employees pre-COVID, and now you're at 8, and it's because 2 employees didn't want to come back to work, but you offered them and you tried to get them back in, well, there'd be this 20% reduction in your forgiveness calculation. The safe harbors are there to protect you. So that's something to be mindful of. If anyone has looked at the forgiveness application, the easy application, you'll see that there's some check boxes you've got to do to say, can I use this form? Items 2 and 3 specifically are these safe harbors. So it's talking about if you've given written communication to an employee and they've denied coming back to work or whatever, then you can use this form. Essentially what they're trying to do is say you can use the easy form if you don't have a reduction in your forgiveness calculation, a reduction from your overall loan. If you're getting 100% forgiveness, that's what that easy form is for. So, and we'll talk about that here in just a second. And then just to finish off my thoughts process here on just the overview of the PPP, this is a loan, right? This is a loan that we're hoping to have forgiven, but it's a loan. That means there's terms. Those terms were originally 2 years. They're now 5 for all loans approved after June 5. So if you were an early adopter and got this out of the gate, you technically are on a 2-year payback. However, there sounds like you could work with your bank to get it extended to a 5-year, assuming that you're not getting full forgiveness. But if you are, then that really doesn't apply for you. And a rock bottom rate of 1%. So that's good. I noticed a couple items, extension of payment for the deferment payment. So the borrower, if you don't apply for forgiveness, they just talked about how when you have to start paying that money back. But if you are applying for forgiveness, that doesn't apply to you. And if there's someone on the call that hasn't gotten a PPP loan yet, gosh, this week I've helped 3 or 4 businesses apply. It's crazy. So they actually have until this Saturday. I think realistically, I've been telling people Friday because you got to work with a bank, and I'm not sure how many bankers are going to be trying to push stuff through on Saturday, maybe. But I just know it's not too late, although it's getting late. So just know that you got a couple days left. Will they extend that? Who knows? I don't think so. I think that's going to be it. And then, yeah, I kind of talked about that earlier. The employer portion of the Social Security tax, you can defer that out even if you have a PPP loan. So a lot of that, I'm sure, again, a lot of you are probably sick of hearing about that, but I think it's just important we talk about it. And then to talk about forgiveness, just kind of briefly, there's 2 application forms out there. There's just a regular form and the easy form. The easy form, definitely for your Schedule C businesses or any business that is expecting 100% forgiveness. And so if you don't have a reduction in FTEs, if you don't have a reduction in what you paid your employees or items like that, then that easy application is for you. The regular application is if we have to go through the calculations of showing an FTE drop or a wage drop, and maybe only 90% of your PPP monies can be forgiven or something like that. That's what the regular form is for. The due date on the applications still say 10/31. To me, that's inaccurate because you have a 24-week period and not to be later than December 31st. So I believe that there's going to be some people that can go beyond that. I don't see how they can force you to file forgiveness prior to the end of your 24-week period. And as a lot of you know, there's calculations for the FTE calculation, for example, pre-COVID levels to there now, it's a 12/31/2020 number. So if you had 10 employees pre-COVID, to know if you have an FTE reduction drop, you have to compare it to your full-time equivalents as of December 31st, 2020. Well, it's kind of interesting how they're making us apply before we know that number. It's almost you have to make a good faith guess. Kind of odd. I think it's another one of those squirrely kind of oversights as of right now, probably because we're not within 30 days of 10/31. As soon as they start getting closer to that date, I think they're going to realize that you have more time technically to submit the application. Because that was on the original forgiveness application prior to extending to August 8th for the PPP. This was back in June. And so they figured everyone's 8-week period would be done by about June 30. And so they were giving people 3 months to finish their loan application. So I note that just because it's on your loan forgiveness application, everyone's thinking 10/31 because they see it, but I'm not sure how concrete that number is. And then we've been talking about the 8-week and the 24-week period. People actually have the option to choose the 8-week period. I've had this question so much. Why would I choose 8 versus 24? The only answer I can come up with is that under the 8-week method, assuming you could use all the funds just fine, match the 75/25 rule, because I believe you can opt to use the 75/25 rule even though you're using the 8-week period. The only reason you would do that is if you think you are going to have an FTE issue come December. So if you were at 10 full-time equivalent employees pre-COVID and you thought you were going to be maybe at 5 come December, but if you use the 8-week time frame, you can use a June 30 FTE calculation, and your June 30 FTE was 10, 12 people, that would be the reason you would want to do it. So if people are concerned at all about an FTE issue, we could actually kind of look retroactively to see if maybe you could qualify for 100% forgiveness under the 8-week method. One more hula hoop to jump through, or potential saving grace if someone's fearing an FTE issue to be mindful of. That's the only reason I can see using the 8-week period. I haven't seen or heard of a different reason why you would not just use the 24-week period. 24-week period obviously just makes everything super clean. You probably can use all the funds just fine. And then the only catch, of course, is that you've got a December 31 FTE number you got to worry about for potential forgiveness reduction.
Jake, can I jump in here? Perfect. That's
Absolutely.
exactly what it is. We had some questions come in. So
Awesome.
The first question we had come in was related to that August 8th deadline, which is quickly approaching. And is it correct that that's the date that the borrower needs to have a formal loan commitment in place? Is that the standard for that date?
My understanding is that August 8th is the last day you could submit your application. So is that the borrower needs to have a loan commitment. The borrower, so the business loan commitment. Is that the same thing? Maybe. So yes, I would say because I've been talking with bankers earlier this week and today, and they're all telling me, Jake, we got to get this in by Saturday. Some are saying Friday. I'm assuming that if they've got the request in on Friday, they're going to work into the weekend to help people. I don't necessarily think that you need the funds deposited. There's always a lag in that. So I think And remember, what's the process? The business goes to the bank goes to the SBA waves its wand, gives the money to the bank to the business. I think as long as we can get, and maybe don't quote me on this, but my understanding would be is as long as the bank submits to the SBA by August 8th, we should be fine. But I have yet to really, I guess, walk through that mechanic just yet. I would just say, get it going. If you're thinking about doing it, get it in your banker's hands and right away.
All right, let's jump to the next one we had. Do you have to go to your bank to apply for forgiveness, or can you submit directly? This person's specific bank is working on building a portal, but the portal is not yet ready to use.
You have to go through your bank. Got to go through your bank. Got to go through the same bank that you got the funds from. Yeah.
Okay.
Unless the only way I could think that you could go around that would be if the SBA puts something out. But I think that, it's kind of a chain of command thing. I think there's going to be accountability between the SBA and the banks to match up everything. And because you got the money through the bank, I just don't see how you're going to be able to go around your bank. And yes, to this person's point, I've got a lot of people itching, ready to go. Jake, we spent the money. We want this off our books, right? Because it's a loan. It's sitting on your books as a long-term liability. We want to get this thing off the books. Let's get this just behind us. And so as much as I want to start jamming forgiveness applications over to the bank, they're calling time out and staying waiting. Remember, the banks have to submit this to the SBA electronically. It's very key. So the banks are all building these portals to either receive information from you, the business, or for their employees to input your paper applications. So the banks are, I think, drinking from the fire hose, so to speak, in terms of trying to get prepared and to streamline this process, because the SBA is laying down very precise measurements for them to submit information.
All right, we did have another question come in, but it was pretty related. I'll kind of ask it. I think you already covered it, but do we have any information on when that SBA portal will be available for the banks to start using?
Not that I'm aware of. I think the SBA is the one that they're waiting on. I've heard some banks saying that we've got a portal ready, but they're waiting. I've heard other banks saying we're not ready. So yeah, I think we're just kind of in this twiddle our thumbs stage. And as long as if you're able to fill out this easy application, it's going to be pretty. I'd hope to shout it's going to be pretty streamlined. So we got to sit tight. Should hopefully be here pretty soon. But I have yet to hear of a bank. I've got quite a few clients around the country, and they're all just kind of. They'll forward me information from their local banks and some of the bigger banks too, just saying, hey, we're still waiting. So I have yet to hear of anyone given the green light just yet.
All right, and another question that's come in, is the PPP a one-time deal? So I'm assuming that means the original application amount is a one-time shot. Is that correct?
Yes. Right now, our Congress friends are currently under negotiations of trying to do a lot of things, and one of those would be to do a round 2 of the PPP. So, from what I've read, some of the proposals that are gaining traction would be they're going to do another round, but a couple qualifiers in place. Some are industry driven. So I've heard of hospitality being kind of a favorable business that would be eligible for that second round. Again, this is just all theoretical, pre-law type discussions. But I've heard that. I've heard that you'd have to demonstrate a decrease, kind of similar to the employee retention credit. You have to demonstrate a reduction in income or gross receipts, gross sales to be eligible. So if your business is doing okay or not as bad, potentially not available to you. So today, the PPP, one plan only, started back in April. Deadline is August 8th. That's your one-time shot. They haven't changed as many rule changes as they've made. There's been no change to the size of that loan that you could have received. The question I get a lot is, Jake, we got this. We were one of the first ones to get the loan. We've heard of all of these changes. Is there more money that we could have gotten? The answer is no. Very finite calculation, 2.5/12 of your 2019 payroll information for most people. That was the crux of calculating it. No change to that.
All right. And Jason shared that he thinks there's about 100 billion still left in the authorization for the program. So
Yep, that's
plenty of
true.
funding.
Yeah, that's true, and that's the reason why they actually extended it to August 8th. There was I think 200 something billion at the time. I would like to think that having a little extra tells us that either everyone got everyone's gotten round one, and either that needs to be hopefully money they use for round two, or they use to help pay for what's happened. So yes, there is money left over, and we'll see what they do here shortly. Supposedly they're trying to get something pushed through before they recess for mid-August. We'll see what Congress does.
All right. And the only other question that's in so far in the chat window is, if you receive the PPP program at the end of April under the 8-week rule, do you need to do anything to formally switch it to the 24-week period?
Nothing formally, other than when you apply for forgiveness, you have to write down what your covered period was. And at that point, you're going to say the date you got the funds through at 8 weeks or at 24 weeks. That will signal to the bank and the SBA what you're using. So yeah, nothing that you've got to do or tell anybody. It's going to be based on what you fill out on your form. Yeah.
All right. Well, thanks, Jake. Let's go ahead and open it up. We've gotten through all the text questions. You're welcome to continue to submit them there, but if you would like to unmute yourself and ask a question directly to Jake, go ahead and do that if you'd like.
Jake, this is Jason. I was the person who asked the question about the 8/8 deadline and the loan commitment date. I do know that the money doesn't have to flow to the borrower on that date. My curiosity was if you knew or had any engagement whether you could have your application submitted, or if the application had to be processed and the loan commitment number authorized. To my understanding, you have to have the loan authorization number from your bank by the 8/8 date, which really kind of should light a fire under people today and tomorrow.
Yeah, that's a great point, Jason. So I believe that the banks they kind of get this soft approval, I think, right out of the gate. So when they submit the application, the SBA will give them that information right away that your application has been accepted. I would hope to shout that that's going to be all that you need. But like you said, and I think kind of maybe if I haven't said it yet, yeah, if you are in the process of trying to apply for one, get your stuff, shut down your computer, go call your banker and say, what do you need from me? And the sooner the better, for sure. The three that I've done in the past couple of days, the bankers seemed pretty, other than just kind of I could tell the electronic eye roll happening. They seemed very confident in being able to submit it, forward it on. We should be just fine. So sounds like, I think if they can get that information by tomorrow, I would hope to shout they can get it in and get some sort of this soft approval from the SBA saying, we received your loan, here's your number, we'll get the funds out to you when we can. Yeah, so that's a good point, Jason. Any questions on, is everyone, I guess I'm curious to know if there's a lot of, is everyone feeling just super confident on 100% forgiveness? Is anyone, I use the term FTE very loosely. Oh, just calculate your FTE pre-COVID, February 15th. And then, you just have to know what your FTE is going to be come December 31. To me, that's kind of, I'm still, kind of scratching my head on just the whole mechanics of that in terms of, how I've heard so many ways people are calculating it, and I'm just thinking, oh God, that's going to be an accounting nightmare if they try to audit those. Will they? I mean, who knows? But if there's any questions on that, I've got some pretty smart people that are helping me out with some of my clients in preparation of forgiveness that are in the trenches, so to speak, and making those calculations. 60, 75 employees really it's a process to determine that number. So if anyone needs that sort of help or resource, we'd be happy to kind of get you pointed in the right direction. To me, that's kind of one of the tougher calculations. I think for most people, we're skating along. We probably used all the money just fine. There was the two reasons you'd get reduced forgiveness. One is that FTE reduction. That seems to be the most impactful, the most kind of the struggle point for anyone if there is going to be one. And then the other was if when COVID hit, you had two employees at 25 an hour and another at 15 an hour, and you reduced those a couple dollars an hour. I surprisingly had no one do that. And that would have gotten you kind of hung up, or a salary reduction. It's almost as if no one did anything like that, which is kind of like, that's kind of warming to hear that no one did that. But the idea was that if that was happening, and I think that's probably more applicable to some of your larger corporate businesses, if that did happen, then of course you'd get a reduction in how much you could have forgiven. Because why? You got the money, you got X amount of money that they assumed you were going to pay, but you didn't pay that much, so you shouldn't be able to get extra money for reducing your wages.
And Jake, while people were, mulling on that, we did have another question come in. What's the status of those expenses you are offsetting not being applicable for the income reduction?
What is the status of those expenses you are offsetting not being applicable for the income reduction?
And if you're the one that submitted it, if you'd like to unmute and clarify, that would be just fine.
Okay, so I'll interpret this in one way, which we haven't really talked about. So this will be a good, if they want to clarify, but something very, very, very good thing we should talk about here is that when you go, let's assume for a second, you got a $50,000 PPP and it's going to be fully forgiven. That's great, right? So what's the one final catch we have to worry about? That $50,000 in essence is going to be taxable, because what they're saying now, this is going to be more of a mechanical issue on how you decide to go. Essentially, it's taxable though. Let's say you used all of that $50,000 on payroll. You do one of two things. One is you either do not take a deduction for those wages paid. So if you paid $200,000 for the year in wages, you would only deduct $150,000 because that money was deemed relieved. It's essentially free money, cash infusion into your business. So what the IRS has come out and said is you can't take a deduction for free money. That's one method. The method I'm going to elect to do is essentially call that relief of debt other income. So I'm going to add it on. I'm going to let them take the deduction for the wage. but then I'm going to add it in as other income. Does the exact same thing. The only thing is that it does, the method I'm going to choose to elect does, I guess, a little bit falsely shows more income, right? There's, if I take away a deduction versus add income, that obviously goes to your bottom line. In one form or the other, it's the same change. It's just which direction are you going? I'm doing the add-in method one, so because I really want to be able to do 2-year comparisons. So I'm going to put that other income at the very bottom of a income statement. Going to highlight the darn thing just so that, you know, for if a business goes and sells in a couple of years or something and we're looking back on it, I don't want them to see this increase in payroll expenses from 20 to 2021. I don't want to see anything weird like that. I want to have apples to apples, but that breakout on the bottom, my PPP forgiveness income, I want that to stand out on the bottom, just so it does what it's doing, just so it stands out. And the other thing too, we haven't talked about the mechanics of this yet, and that is, as a lot of you know, there's that QBI deduction out there, qualified business income. And for those that potentially are limited based on income, you need those wages to you look at those wages for purposes of reduction of that QBI. And I don't want a reduction in your wage to reduce a deduction on your tax return. So that's like looking 2 and 3 layers deep, but it's just something else that I'm trying to forecast to say, okay, how should we be accounting for this forgiveness of debt? So super long-winded answer of an interpretation of a question I hope I got, and that is that the status of those expenses you are offsetting. I don't know. Is anyone else reading that a different way? Sorry, maybe I might be way off base.
Yeah, and if the one who submitted the question wants to just say, hey, we hit it on the that answered their question, that you can certainly send that in to us if you'd like, or say, hey, we missed something. We'd be happy to try again, I think. Are there other questions? Oh, go ahead. Oh, thought I heard somebody start to ask a question, but all right. Are there other questions for Jake? It's all routine. We've done it many times, right? It's just old hat by now.
That's good. Yeah, if I were I heard somebody.
Call the help desk and get them hooked up with somebody. Yeah.
Did you catch that, Joel?
Okay. Who should I send it to, Craig?
So I guess the other thing that I would maybe, you know, if I'm tuning into kind of an update like this, I guess what I would have been listening for was a massive change to the application for forgiveness process, and there hasn't been much. It's still the same 2 forms. There was the original form. I guess there is the easy form. If you're not familiar with the easy form, I would say jump on the SBA website. They've been kind of slowly making their website a little bit more user-friendly. They've probably never had so many visits to their website. So they took the time, I think, to make that a little bit more user-friendly. You can access both forms, and it would be you can get the forms, and you'll also see links to the instructions. If you haven't seen the easy form, I would definitely encourage you to look at that as well as the instructions to determine if you can use it. I think most people will be able to use the easy form, and it's a 1 or 2 pager that really is have the instructions and the form kind of there side by side, and it should be pretty straightforward if you did not have the big thing would be is if you didn't decrease your workforce, or if you're self-employed, it's a lock. You should be able to fill that form out, and then as soon as that bank is ready to go, you're either going to shoot that over to your banker, or they're going to send you a link to probably type in the same information. You can have that form ready to go. I think the misconception a lot that I'm hearing a lot is my loan's under 150,000. I think that number got out into the public, and there's still, I think Congress is still kind of talking about it, but it's not relieved anyone from filing a form or anything yet. There was the thought of if the loan was, quote, small enough that it's just going to be instantly forgiven regardless of an FTE reduction, regardless of anything. I'm all for it. But I think practically you're going to have to file something to kind of, get that approval from the SBA to relieve your loan. So I think that's probably what the easy form is, except that it's not as easy as checking a box saying my loan is less than 150,000. You got to go through the steps of writing out some of those numbers. So that's probably the one main misconception I've heard. And that is that it's going to be as simple as doing nothing.
Jake, one thing I'm just, since you're obviously an accounting firm you work for, how often are you communicating with your clients? Are you encouraging them to stay in touch with you since these programs are kind of changing? What are you telling your clients on that respect?
Yeah, so for those clients, we're kind of a full, like most larger firms, we're full service. So we do the tax stuff and that's kind of what my expertise is. On the tax side, we do audit stuff, but then we also do payroll for a lot of clients. For those clients that we do the payroll for, we're tracking everything, having the applications ready to go. We're kind of finishing those up right now because everyone's basically gotten to the point where they've spent the money, and we're ready to apply for forgiveness. So those clients we're in touch with every time we need to do a payroll anyway. For a lot of my clients who I either don't do the payroll for, or they're a sole prop, or they do they've got a larger ADP or Paychex or something that's doing their payroll. I've been probably reaching out in the past few months, once every few weeks. They'll oftentimes email me. I've been pushing people to our website where we do have some pretty good resources. Back in April, May, and June, we were doing hour-long webinars just to try to get in front of as many clients and even non-clients. We were, there was a lot of just unknowns and very few. I brought in a lot of new clients who their accountant just wasn't able to help them, and they were just like, we need answers, and so they were coming over, and fortunately, we had a great team to help kind of push info out to them, and we've been helping them ever since. And so I would say jump on our website for any new big news updates, but fortunately, we haven't had anything too groundbreaking in terms of being able to take a little bit of a breather. But yeah, we're available to help. And even if you, I was helping, when we were going there strong, I was doing phone calls until 9 o'clock at night, trying to just help people. They were calling me, just saying, hey, we can't find this information. Our accountant doesn't know. And if there's anyone here listening that needs the help, I am more than happy to extend that to you. And don't worry about, it's kind of just all, I'm at the point now where it's just like whatever people need, we got to get that information out to them. And I'm happy to do that. No cost, no charge. And, there's no obligation at all. I just want people to be informed as best as they can to make the right business move. And for a lot of small businesses, they're trying to be, this is a tough time right now. And so if I do some very elaborate calculation for your 15 employee force, yeah, we'll talk about something. But if it's just, if it's a quick 20, 30-minute call, just someone else to bounce an idea off of, or a question or a concern that you have, I'm more than happy to do that at any point. So.
That's great, Jake. And we did have one more question come in while you were kind of wrapping up there. Can a self-employed individual apply for PPP? And they have been receiving unemployment insurance up to this point.
Whew, that's a good question. A self-employed individual. So yeah, you gotta be careful on that one. So I'm trying to figure out how the self-employed individual was getting unemployment insurance benefits. I guess if you're a single member S corporation, you could apply. Yeah, you're walking a tightrope on that one because you're kind of taking advantage of two different programs. I would think as long as there's no overlap between when you were recording UI, when you were collecting UI benefits and making appropriate payments to yourself, right? Single member S corporation, you got to pay yourself. So your W-2, you're sending a W-2 to yourself. As long as you properly are documenting that you paid yourself, not while you were also on UI, right? Because you're paying yourself so you can use the money, the PPP money for forgiveness. That great question. I think that would be a little bit outside the scope of giving you a quick answer, but I do think there might be something there. We just want to be careful of the double dip. The other option too, I'm not sure how much the PPP funds are versus your UI benefits. I believe you could look at repaying the UI benefit. I think this is where I will admittingly need to rely on my payroll gurus in the UI world. I'm tax. And so, and I kind of know, I know the PPP pretty well, but how that interrelates with the UI program is a fine line. I know out of the gate, you had 5 employees and 2 are jumping off and going to UI. In fact, you kind of furloughed them to UI, right? That was reality. You could have a PPP, but you were then, now you're at a crossroad. Do I bring them back on, tell them to get off UI where they agree to get off UI, and I pay them, so I use my PPP funds? Well, what were you paying them to do? Stand around? Because a lot of people had to shut down, right? That was the big juggle. That was the juggle act. Well, then the extension came to 24 weeks so you could get people off of UI. This is the whole goal of the program, off of UI, back into work, and then start paying them appropriately. So as long as the question is, I'm self-employed, how long were you getting those UI benefits? I think is what I would want to know. If you were getting them out of the gate, COVID hit, understandable, business shut down probably, and you were getting them up until today, I don't know. I would say, okay, get off UI. Now start paying yourself appropriately. Appropriately would be based upon your 2019 W-2, divide that by 12, start paying yourself monthly that way or something like that. And then whatever you can get in on this last bit of your 24-week period, I would think there'd be something just fine there to apply for forgiveness. What I don't know is the answer to is, can I pay back my UI benefits so I can then pay myself for that time I wasn't on UI? That'd be kind of my 1A question follow-up piece. And that might have escaped my chat box. So whoever that was, happy to, if I didn't explain it well enough, by all means, reach out to me. I think my email is on the first couple of slides. So happy to follow up with you, because now you got my brain kind of spinning, I think that's it's a reality. I got an email from someone yesterday And it sounds like, and this was the first time, this is how kind of ignorant I was on the UI world. It sounds like the federal unemployment, I guess maybe I'm kind of rambling, I'm sorry, but someone got a letter from UI stating what their benefit was, but it was for a single member LLC, not an S corporation. And I was trying to figure out, well, you don't pay UI. Well, it's the Fed UI benefit coming through the state program. And so that's a program that I guess you need to apply for. And I think that's somewhat new. So self-employed individual out there, not an S corporation, you probably aren't paying UI benefits on yourself. Well, you can apply for Fed UI now. I didn't know that.
Jake, if I can just add a little bit, I would, the pandemic unemployment insurance program might be applicable here, but I was just going to chime in too, and I think you touched on it, double dipping, and then the original intent of the PPP program. I would also just add which of those programs is more beneficial. And so in a self-employed situation, the PPP, I mean, unemployment only covers your wages. The PPP program obviously covers wages, taxes, and then those additional mortgage interest, rent, and some of those other things that are eligible uses of those funds. So I would ask Christine's within the network, the SBDC network now, but as it relates to the client, which of those two programs is more beneficial to the activity of the business and versus the activities of the person? So that would be my one addition.
Yeah, and I completely agree, Jason. And I would think the only reason I would think the UI would be better would be is that you had, if it was a self-employed single member S corporation, you had maybe a $12,000 W-2 from 2019 or something small, and the UI benefits were just large enough, maybe a little bigger. That'd be the only reason I would think that. But don't forget that I think you're going to have an unintended consequence too down the road. You pull on UI, your rate might get affected. I have no idea what that would be. I don't think they're doing it for COVID matters, so that might not be an issue. But I mean, there could be unintended consequences by choosing the UI. I'd like to think not, but yeah, you got to juggle it. It seems as it would seem to be hard to believe the UI would be better. Although that $600 a week check, that's just kind of, sadly made people look to that program. I shouldn't say sadly, because you got to look at what's the best option. And so unintentionally, that could be the way to have gone, for sure. But yeah, got to kind of juggle it. I think there could be overlap. I know there can be overlap. It's the double dipping. And I would not encourage 20 weeks of UI and this very large bonus. Right? Okay. Enough about that one.
It's probably also worth noting, Jake, that there are people already going to jail for misuse of the federal programs.
Yeah, someone bought a nice Lamborghini down in Florida, and that didn't go too well. So they are, and I, the deep down, I'm one of the CPAs that wishes my clients would get audited more, but it's because I make them do the right thing. And until people get audited, which the audit doesn't happen, they're like, oh, we can do this, we can do that. And so I love it when it's showcased that they actually are looking into programs and the misuse and misconduct, because it's like, that's why I said, so I'm a weirdo like that though.
Jake, we had one more question come in too.
Okay.
Can owners of an S Corp deduct their health care costs on the PPP because payments are already included in their compensation? I read that they can't do this, but I wasn't sure.
I need to know the answer often. They just, August 4th, it just further clarified that. I believe the answer is that yes. Sorry, I'm thinking through my progression here. It's a fantastic question. this is an S corp owner greater than 2%. They're adding their health insurance into box 1 and box 1 only of their W-2 in order to get the above the line deduction on their personal tax return. And the question is, can I consider that as part? I'm at like 95% confidence. I need to swing back around with that person and this group. I should have known the answer to that. And for some, what's weird is that we've gone around this one so many times, and for some weird reason, there's something on me that says you can't. And I'm trying to think why I either put that to rest or maybe I didn't want to believe it. That sometimes happens. Why could I not? I'm going to have to follow up on that one because it's very applicable. You got, if you are a one person S corp owner, I mean your entire PPP was based upon that W-2 that you submitted, which would have included the healthcare costs, because out of the gate we didn't know, and most people applied with it in there. And so to say that they couldn't, God, and I can read it in the, I can visually see the answer right now on one of the FAQs. So I apologize, I can't answer it live because it's a great question.
Yeah.
Great question.
All right. Well, thanks, Jake. It looks like we've wrapped up most of all the questions that have come in so far. Jason or Jake, did you have any kind of final comments you wanted to share with anybody before we wrap up today?
I'll just remind potential viewers of this recording that we are recording on August 6, 2020. So if you're watching this August 9th, August 12th, November, September in 2021, we probably will pull it down by then. But it's worth noting the date of this recording because things are changing relatively frequently. In my engagements with the Small Business Administration, it's being advised to people to make the best decision based on the information you have available on that day. So just know that things are changing, like Jake said at the top, but do your best to make the best decision you possibly can at the time of your decision. But thank you. Great job, Jake. Thank you.
Yeah, and I will, I'll end it by, I just cheated and pulled up the answer. And as long as you can include it in box 1, you should be good to go. So the recently disclosed FAQs from the SBA, which came out August 4th, talk about specifically the limitations on what an S corporation can deduct. And so it talks about how because they are included, it's basically saying you can't include what's not included inside your wage. So if it's included inside your wage, which you should be doing properly to get that deduction, you're good to go. So I'll finish it at that. I think I'm good, Joel. Thanks so much for being my second set of eyes for all these questions. That was great.
Perfect. No problem. And thanks. What a great way to end it by wrapping up the loose end question, right, that we had out from our viewers. So yeah, thank you, Jake, for sharing all your expertise with us today. Thanks for Jason and Jen for helping advertise today's session. The recording will be posted on our website, same as they've been in the past. And I believe we'll be back on September 3rd, I believe would be the first Thursday of next month for next month's webinar. So with that, everybody, have a great day.